Hello and welcome to another episode of the Real Estate Investing Club. I'm your host, Gabe Peterson, and this is the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items for you. First, if you like this episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running far into the future. Second, if you're a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, I've created an ebook just for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All I charge is our admin costs to keep this show running. So if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says get the ebook in the upper right-hand corner to grab yourself a copy. With that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right. Welcome back to another episode of the Real Estate Investing Club Daily Deal Review. For those of you who are new to the Daily Deal Review, this is where a previous guest comes on and talks about one of their deals. Today we have Ryan Gibson with us. He was on an episode one behind this, and he goes real deep into building a team, building a business, and really taking your business to the next level. So if you missed that, check it out. But today, Ryan is here to talk about his deal. So Ryan, first, thank you for hopping on again.
Yeah, thanks for having me back, Gabe. Appreciate it.
Absolutely. Let's get started. So where was this deal located and what type of property was it?
Yeah, so we bought one portfolio of self-storage facilities. We bought 4 self-storage facilities, 2 in Longview, Texas, 2 in Tyler, Texas. So it represented 1,837 units across 232,000 square feet of storage in one purchase transaction. You know, they were bought individually, but we raised money to take down 4 properties in those 2 markets.
And it was one owner.
Correct.
Nice.
Yes.
I love it. So that is a huge deal. 1,837 units. That is, I mean, I'm looking at it from the perspective of mobile home park, but I think it's a little bit different. So still, that is a huge acquisition for sure. So next question, how did you go about finding this?
Broker relationship.
Brokers, as I've always said.
Yeah, we have an excellent reputation of being a bona fide buyer that gets it done, and it got brought to us early in the sales process.
Perfect. I love it. And we repeat this so many times on the Real Estate Investing Club. Ryan said it in his last episode. It's all about relationships. It's all about creating a good reputation. So if you're in real estate, understand that this is a relationship game. But moving on, how did you go about pricing this deal?
Yeah, so this was a big undertaking. So we had to go through all of the books, all of the bank statements, all of the financials to do our due diligence to make sure that we could verify the income that was presented in the broker offering memorandum. And so once we had all the properties kind of individually, valued and analyzed, we made sure it all rolled up to the portfolio level. And then we looked at the NOI cap rate going in and what we thought we could reposition the property to.
I love it. And so, I mean, you're looking through these books. We've seen books going through mobile home parks that are just horrendous. It's just a bank statement or just like paper, flipping through papers, keeping all these notes. Did he have good books, or was it kind of difficult to put together?
Okay. It was okay. This one was like average, about average of what we see in the market. But for us, it's more about, understanding. It's less about the cap rate going in and more about what you can do with the property and the value that you can extract from it. We look for usually a 30% total project margin, and we assess that we could get that. So the books are never perfect. They're never they're exactly the way that you want to get them, but you want to look at the opportunity as well and kind of bench that mark against the revenue that you can then verify and validate.
Perfect. All right. And so next question, how did you go about financing this deal?
Yeah, this is great. So we did a purchase acquisition loan with a life insurance company called Stancor out of Portland. So they gave us a great rate, 3.75% amortized over 25 years. They gave us about a $5.8 million loan to buy the portfolio. So one loan to buy the whole thing.
Wow. And you said 3.5%?
3.75.
Still 3.75.
Killer.
That is a killer deal.
Yep.
So you said this is a value add. I know you guys had to have done quite a bit there. So how'd you go about adding value to this deal?
Oh man, this is the fun part. So we renovated all of the offices, or we're planning on to renovate all the offices. When we came into these offices, one had about 12 cats living in it, smoker, smelled like a hen house, it was awful, right? So we went in and we brand everything. So we actually have a national storage brand that we started called Free Up Storage. So we redo all the signage, we do all the offices. We turned it into a retail center, not a place of like somebody hanging out, like living basically, right? So we go in, we've got all the carpets, got all the drywall, got all the lighting, and we do everything to our brand standard. So we put in the countertop and the signage and the cameras and all the things that, like, when you walked into the store as a customer and you want to rent there, it feels good. It feels retail, it feels fresh, right? So we did that. One property, we had to replace all the doors. So they're all the swing doors, and it's very windy. Okay. Yeah, very windy in Texas. So the closet type doors just don't cut it. So we swapped all the rollout doors out, or we're going to. Resurfacing the drive aisles. A lot of these drive aisles were run down, they're worn out, there's cracks. So we started resurfacing the drive aisles. We replaced a lot of roofs, we replaced a lot of signage. We just did general tenant cleanup. So a lot of people not paying, a lot of people behind, a lot of people that need to be auctioned off. So we handled tons of auctions and everything like that. So in totality, NOI now is what is it now? 45,000 NOI.
Before you hop into that real quick,
yeah.
So that's the next question I'm going to ask you. Right before we get to that, though, actually, the first question I have you ever had one of those TV shows on any of your properties?
That'd be kind of fun. But no, honestly, there's no drama. It's really cool.
That's
great.
It's
really, really cool. Yeah.
All right. And the 12 cats, that just goes to show when you're in real estate, anything can happen. 12 cats, you just buy it.
Yeah. I mean, that's not really drama, but yeah, it's just like, nope, cats don't belong in the office. Sorry.
Yep, for sure. All right. So let's get into the numbers. What'd you buy it for? What'd you put into it? What's your projected exit?
Yeah. So we bought it for $8 million. We are looking to exit around, I think, $15 million. That was the projection. And we're on target. We actually underwrote the cap rates going up, which is ridiculous. I think we have that cap rate exiting at like a 6.9 or a 7, but there's no way it's going to be a 6.9 or a 7. Portfolios like that are trading in the low 5s right now.
Oh wow!
So we think it might be pushing up to 20 million or more. For an exit. And, our NOI right now is $45,000 a month more than what we projected. So
that's gotta feel good.
Yeah, we're doing really well on the asset. Investors are getting a 7% cash on cash distribution per annum paid monthly. They're gonna see probably upside annualized into the mid to low 20% range annualized, year over year. So they're gonna double their money in 5, most likely of a projection. But here's the cool part. So we're $45,000 a month over NOI projections. So we find another facility in the Longview market to buy, and it's underperforming. Value add, but great property, 50,000 square feet, another 350 unit or another 400 units. And we say, well, how do we want to buy this? Do we want to raise equity like we normally do? Or do we want to try to somehow lump it into the Tyler Longview portfolio? And so we said, well, hey, we're $45,000 ahead. Let's just raise private debt at 7% and buy this new asset 100% financed, the investor is going to get a security against that new asset, and the Tyler Longview portfolio will service that debt. So we consumed another property for free by simply just increasing our loan proceeds by a couple $1 million.
I love
The couple $1 million is serviced by the Tyler Longview portfolio because that payment is only going to be about $12,000 a month. So we essentially consumed another project, didn't liquidate any equity or give up any more or anything like that. The investors got a bonus property that's going to provide another $2 million, maybe even more value to the portfolio. Yeah. And when you blend the interest rate, so you're like, wow, 7%, well, isn't that kind of expensive and this and that? When you blend the interest rate with the life co-insurance, the blended rate's 4.64%.
Wow.
So when you think about it from a totality perspective, and the LTC is still 66%. So it's still like a very attractive thing. And hold on, it gets better.
So when you've already sold me, this is a great deal.
Oh, it's already funded. Trust me, this is already gone. So what's really cool is the portfolio came with several vacant parcels. And we didn't have enough time to value them because, you know, it was like, you got to buy this. There's a million offers that are going to come in. You need to like look at the storage, be good with the price, and close. So we didn't have enough time to value those vacant parcels that we could develop. So our investors are just getting them as a bonus.
Nice.
So we didn't know what we were going to do. We knew that they were there, and the bank, the Lifeco money, didn't collateralize those properties. So those are unsecuritized parcels that we could sell off as a bonus or whatever. So we did a bunch of analysis. So at one property, there's an extra 200,000 square feet of storage demand. So we're going to add on 60,000 square feet to that property. And we're going to make it a 3-story climate controlled building, making that facility a Class A facility, which is going to increase the value of the entire portfolio so much more, because if somebody looks at the assets, it's a higher quality asset, which gets a more compressed cap rate. So it essentially increases the value across all the other properties.
Man.
And we're going to do that with private debt securitized against the parcel. And once it's stabilized, the insurance company is willing to kind of refinance it out at the lower rate, you know, once we build it. The other property, Metro Storage, we're going to add on 20,000 square feet. And then at Gilmore, we're going to add a retail pads in the front. So those vacant parcels are going to be, you know, adding another 70,000, another 20 plus 60. So 80,000 square feet to the portfolio, probably another 500 or 600 units.
Wow.
So that's a cherry on top for the original investors that just thought it was going to be a 15 to 17% annualized return. So that deal is completely different in a good way. And it just keeps getting better. And you know what I love about it is we have a regional manager down there. So we have scale in that market. We actually opened up a regional office in Longview to help service the properties. And you get that efficiency because you have so many properties in one market. Love the deal.
Yep. So, I love it, man. That's, I mean, that is, if there's ever a slam dunk, that is a slam dunk. Yeah. They're not all like that, but it's I'm glad you guys found that little cherry on top once you actually closed on a good deal. It was already a good deal. It became a better deal.
Yeah.
It sounds amazing.
Yeah. Super cool.
Awesome. So that takes us to the very last question, lessons. Every deal that we do, there's always going to be a lesson learned. So what's the biggest lesson you learned through this one?
Biggest lesson learned, let's see, probably, the creative financing was not a lesson, but just kind of a neat tool. I mean, just, what's made this deal great is the people. We hired an amazing regional manager, Valerie, who's done an excellent job down there. And I mean, honestly, she's probably the reason why it's going so well. Obviously there's lots of things that go into this, but people make the difference. And she is doing such a great job with managing the staff and getting these properties turned around and building more people to make this property go. I think she's doing a really good job of that. It's kind of like, usually when you fail, you learn a lot of lessons and there's a lot of things to kind of go back through. Everything going well with this project so far. So it's hard to say, oh, that's my biggest lesson because, if I had only done this, but I would probably say that things went really well with this. The loan that we used to buy the property, we didn't confuse the lender with all this construction stuff, because it's hard to close a good loan and a construction component to the loan. So we just kind of kicked that can down the road, and we're just going to use, sort of secondary private debt raise to finance the construction, the expansions. So I think that's a big thing. I mean, if you're trying to thread the needle of closing a deal and having construction draws and all this other stuff that goes into there, the banks start getting like, okay, you want this leverage, you're buying this out of state, how are you going to manage it? If you don't quite have that reputation yet, you want to get creative in the financing, and you want to keep it simple though. If you can just find a simple purchase loan and then kind of work through it later, I think that can sometimes really help you.
Nice. I love it. All right. Well, that closes it out for this deal. Thank you very much for hopping on the show and walking us through it.
Thanks, Gabe.
All right. And again, if you missed Ryan's full episode, go one behind this. He goes deep into how to build a business, a real estate business, and not just a deal machine. So Ryan, thanks again for hopping on. For everybody who's here with us today, as always, thank you guys for showing up. You're the reason that we do this, so we appreciate having you here. If you have any questions, reach out to me, therealestateinvestingclub.com. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode as much as I enjoyed putting it on, and we're able to pull some actionable advice that you can apply in your own investing today in the field. Before you go, we have a gift for you. If you're a new investor looking to get started, or an established investor looking to take your investing to the next level, I've created an ebook just for you, available on our website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find deals that are actually deals, how to finance a deal with little to no money down, and how to exit those deals for maximum value. And if you get the ebook today, I am throwing in a bundle of bonuses, 7 of them to be exact. The first one will be the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating wealth in real estate. The second bonus is the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools, systems, and even the vendors we use to see the success that we do. And the third bonus is the top 100 best performing keywords pack, which will give you the exact keywords we use to target motivated sellers online using PPC ads. The fourth bonus is our contracts bundle for wholesaling and renting real estate, which will give you access to all the contracts we use in the field to execute all different types of transactions. After that is the Investors Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automatically from those calculations. This is a lot of bonuses that I said. I'm just going to keep going down the list. Number 6 is the Investors Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And the last bonus is the Wholesalers Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. Whew, that is a bundle. So it's a mouthful. You get all of those bonuses for free when you download the ebook. All we charge is the admin cost to run the show. So if you're interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page to take advantage of that deal. And with that said, I hope you have a fantastic day, an even better week. Keep rocking real estate, and I look forward to seeing you on the next episode.